welcome to the first episode of We Are Listening To. We are a bunch of grad students who are podcast enthusiasts and listen to a lot of podcasts. So we decided there isn't as much awareness about what this medium really has to offer. So me and my friends decided that we every week will discover a new bunch of podcasts, maybe relevant to what's happening in the current news, maybe not. There are a lot of surprises ahead. Even we don't know what lies ahead. But we thought this initiative is going to be great and people can start listening to podcasts more. So we have with us three of my friends, and I would love if they introduce themselves. So,
Hey, I'm Niranjan.
Hi, I'm Omkar.
Hi, I'm Suyash.
as you can see, there are two Omkars here, and to avoid confusion, they're just going to keep calling us with the names that they have called us for the last 6 years. So,
Yeah.
So to introduce myself, I'm Matre.
and I'm Bhatia. So you're gonna listen to these names again and again. So we'll just call ourselves that, I guess. So what are we going to do this week?
All right. So first, let me just take a moment to say why exactly are we doing this. So as Bhatia rightly said, we have been listening to a lot of podcasts on our own, and we have been having discussions in between each other, two of us, three of us sometimes. But we never got an opportunity to combine all those discussions and maybe put it out as a review thing, or maybe just suggest people, okay, just have a look at this podcast. That's why we are doing this. And second thing, why podcasts? There are three basic things we have distilled down to why we listen to podcasts and why we love it as a medium in general. One is the simplicity which with podcasts are made. There is minimum editing, no real filtering to the content over there. That's one thing. Second, as a result of minimum filtering and editing, there is honesty, uh, least showmanship, and podcast as a medium. There's only words you have to spend, and that's the only thing you have to show what you have, show what you got on that medium. And second, very important thing, it has a lot of context. It gives you a lot of contemporary references, it creates a lot of relevance around a topic, even if it is 200 years old. So that's basically why we love this medium, and we think more people should listen to it. So start with that. Let's see what we have got for you this week. So I'll ask Suyash to just let you know what we have.
Yeah. So, what are we covering this week? This week, we are covering Gamestop, which is a topic which has rallied around the internet and newspapers, any kind of mass communications over the past 2 months now almost. It all started in January. And how is it different? What was different about this whole topic, and what all we got to know about this? This is what we'll be talking about in this episode basically. And in the past we have seen a lot of battles between retail investors versus hedge funds, for example, but this was different. This was a battle between Wall Street versus the people, and that's what makes it a very unique thing that has happened in the history of the market. So I would next like to ask Niranjan, what did actually happen in the past 2 months?
Before we move on,
Thanks.
Suyash, did you lose any money in this?
I think he wasn't in the game that time.
Thankfully, I was not in the game at that time, so I did not lose money. Neither did I gain money. That is one thing I feel bad about, because a lot of people earned and gained a lot of things during this GameStop rally.
Okay.
But yeah, thankfully, I was not part of this volatility that happened.
Okay.
So actually, two of my friends got free Robinhood stocks at GameStops, and they got it for free, and they sold at 170. So that's just luck. Okay, so before we get into the details, I'll give you a brief thing what happened actually in the past past few months. So GameStop is like it's a retail store where you buy game CDs and all that kind of stuff. And what the stock market or hedge funds and big financial institutions started to notice was few years back, the sales of GameStop and the company itself was going on a downhill. And what they did was they said that since everything is coming up online, people are not going to offline things. The big hedge funds and everyone said that we bet that the GameStop's stocks and the company is going to go bankrupt. So what they did was they engaged in something called as short selling. And Omkar can tell us what short selling means in a brief thing.
Oh yeah. So one of the common introduction points for a lot of common folks to short selling probably came through a very great Michael Lewis book called The Big Short, which is now a movie as well. So in brief, without boring a lot about what the short selling is, we basically, it's exactly opposite as buying a stock and hoping it will go up. It's exactly opposite of that. So you on a given date, you say that the stock's gonna fall because I do not believe in the stock, I do not believe in the company, and you say 20 months from now the stock's price is gonna be at a certain price. So you first sell the stock at today's price and then promise to buy it later, 20 months later, when you think it will be at a lower price. So you're basically betting against the stock. In the past, short sellers have actually been the people who Wall Street feared the most. They were not the Wall Street, but in this episode, they have been on the other side of things. So maybe, Niranjan, what have you listened to that has prompted you to say that they are the villains in this story, apparently?
Yeah, so to tell you about why they are villains, basically, so to give you perspective, all these hedge funds, they have very high financial resources. And what they essentially do is that they have literally shorted GameStop more than 100%. That means if there are 100 stocks, more than 100 stocks have been shorted. And so because of this, since you are already selling the stocks in the first place, the GameStop value went from like $50 to around $5 to $2 in the past year, which is ridiculously low. And because not many people in the whole world or even the United States know how this financial markets work, when they cash out, going from $50 to $2 is a huge margin for these hedge funds. And they literally can have in one swoop of one company, they can gain maybe $10 billion or something. At least it was in GameStop. Some hedge funds had invested over $10 billion overall, and if the company falls, they get that much. And as a common person or as normal citizens, nobody has that kind of a capital. And all these hedge funds, they get capital from these banks, which is actually the common people's money that is going there and has kept at an interest, and they get to play with it. This is what happened, this has happened in the past in different market crashes. But so that's why I think that they get to play with something that is not it. So Elon Musk tweeted something and he said that you can buy a car, it's a physical object. You can buy a house, it's a physical object. But you are shorting stocks more than 100%, which is not actually a physical value. And that really bugged me that, oh yeah, he's right. Like there are 100 stocks, but you're shorting at 120 stocks or something like that.
So what are some great resources to listen to so that I can get a hang of what you're saying?
Yeah, so that's a good question. So so this is an NPR podcast. So NPR is a big podcast network. They cover everything from news to politics, and they're really good. So they have a podcast called Planet Money, and one of the episodes, we link it down here in the description, is about how the whole story happened from the whole center of the story was the Reddit group called Wall Street Bets, where basically common people pooled up and said that if we all invest together, the stock prices will go high, which means that the hedge funds and all the big capital will lose. And it's been really greatly explained in this NPR episode. And I think that is one of the starting resources to have.
Okay, that makes sense.
That's interesting because you brought up one interesting thing, that hedge funds do have backing of huge banks to pump in money into their system. They buy more stocks, sell more stocks than they ever have. That's interesting, but I am nobody in the investing scenario. I don't do that, and I don't even understand it properly. So from my perspective, let's say I want to get into investing. I want to, for example, buy a GameStop stock. What should I be aware of? What should I be uh, wary of in terms of safety or maybe just financial sense? If any.
That's a great question, and that is what actually happened with most of the people. So if you have seen stories, I literally had a friend call me from India and say, "Hey, do you invest?" And I said, "Yeah." He's like, "Can you invest on my behalf in GameStop stocks? I'll pay for the tax. I'll send money to your account." So that's the popularity, but it's a bubble, and it's a very short bubble. Like, you have to consider the fact that it literally lasted for a month or some weeks. So as if you are looking as a new beginner to invest in such a very volatile stock, like it literally went from $5 to $350 in the span of 3 weeks. That's a huge volatility. And now it's back at 5, then it went back to 170. So I would not it's not considered to be for a beginner to invest. And that's what happened. Many people lost their money because they were thinking, oh, this stock is going up, and on these different investing apps you just see the statistics plus 300%, plus 200%, and many people actually lost the money based on what happened. Like they invested at 300, and people who followed it, everyone knew 300 is way overvalued. And people still invested because they just caught up the bubble, like, you're doing it, so I'm doing it, which is not how we should start. So that's a good question you brought up for anyone who's starting out in this game.
That's all good information, but can you suggest to our viewers a few resources to maybe direct them towards such kind of viewpoints too?
I might bring a slightly contrarian view into this, and don't hate me for this or don't call me an elitist. But my contrarian view to this is I do not really support. I do not really think this was a small man fighting against a big Wall Street, because at the end of the day, I think the institutions that lost and won money all were big people, and all the small people lost money in the end. Slash are still going to be left holding the bag at the end of it. So that all the episodes Niranjan mentioned about were great, but I think my prior comes from listening to an amazing daily podcast called Bloomberg Surveillance. They literally just call up people and ask people in Treasury, in Fed, businessmen, people working at Morgan, JP Morgan, Morgan Stanley, and ask them for their opinions. So my information comes from there. So probably that is my prior injecting into this. I just want to be very clear. But I think there are a couple of things that we need to think about. One is that I look at it as something that a retail investor I don't call it going rogue. It's just a change in behavior. A lot of people were home and had a lot of time on their hands, right? Most of the retail investment in the past has been purely passive. But over the last few months, now the retail investor is much more active. What that means is, if I am a fund manager, and believe it or not, all of us are indirectly or directly dependent on a fund manager, because not a lot of people know, but your 401ks, your pension funds are in hands of somebody like this hedge fund somewhere.
That's what I was talking when I said that this is the people's money they're playing.
Right. But on the other side of things, if these people lose money left, right, center,
it's our money.
Your parents' 401k is going down the drain. So be very careful what you wish, whose death you are wishing for, because in return it might come back to haunt you. So we'll link a couple of really good episodes from Bloomberg Surveillance for you to look at the other side of the story, where one, that retail investing is a lot of risk, a lot of volatility. So be very, it's not necessarily very healthy for the economy, or it might just be a different direction in which we are taking the economy in. And second, a lot of people did have a lot of vitriol against Robinhood, but remember, it's a company that needs to collect money from people who lost it and give it to people who won it. And if it has no way of recovering money from people who lost it, whatever you won has no value. And again, there is a brilliant interview on another one of Bloomberg's podcasts, which will also link below. But yeah, that's the other side of the story you should be aware of.
I would like
since you mentioned about the big things, I think Suyash, you told us about a podcast which had the perspective of common people.
Yes, that is why I have been trying to interrupt you. I think twice now.
Just feel free to interrupt Bhatia at any moment because he won't stop if you don't to stop him actively.
Yes, exactly. Because I think people should know the other side of this story as well. There are some people who have actually benefited from all of this that has happened. One thing I would like to point out about Robinhood, since Matre, you were telling us that you're new to this, you don't exactly know how this works or how people are actually investing. So Robinhood is such app which you can open a brokerage account and you can start trading as a retail investor from that app. But what strikes me actually was Robinhood actually stopped trading for a bunch of hours during this market volatility. GameStop created such high volatilities in the market that a brokerage app, which is used by millions and billions of people, actually stopped trading, which also hampered, or I would say affected the market in some sense. This was just one thing that I wanted to point out about how severe was the volatility at that time. And nextly, the podcast about retail investing. This was the first podcast about GameStop, which talked about Wall Street versus the people. It was literally a battle between the Wall Street investors, the hedge fund owners who actually invested in who shorted GameStop, and the retail investors who actually got to know that GameStop was a highly shorted stock, and then they decided to come together. It was something like an army, a virtual army, who decided to keep buying stocks more and more, to keep buying GameStop more and more, and cause this short squeeze. So this episode we have put a link about this below for referring to it. The podcast is called Wall Street versus the People. It's from Retail Investing, and in this podcast they have talked about a few people who actually benefited in millions, I would say. Some examples of these people, they have actually come onto that podcast and talked about what they actually did with that money. Some people were kind enough to donate these money to charities. There are a bunch of people who actually went to GameStop stores, bought Nintendo Switches, and donated them in regions of poverty, so that children could, people who have not been able to experience these pleasures.
So taking from the rich and giving to the poor.
Giving to the poor, yes, exactly. Something like
the Robinhood app, you mean?
By investing on Robinhood. it was something like that. So that is what happened. So there is also another, I would just like to say that there was this perspective that some people did benefit, and it was some common people who benefited from this, who took the risk at that point, and they earned a lot from this.
But don't you think this trend itself is very harmful moving forward? Like, for example, what stops me from saying tomorrow that I like a stock that is not in a fundamentally strong company, and then we raise up the prices of that stock, and then I sell off all my shares? That is, pump and dump schemes are illegal. Although in here there is no evidence for collusion, there is no evidence for it being malpractices, but tomorrow, what stops people from doing this? And there are a lot of podcasts in which people talk about this very, very upfront, that if this can happen again, how strong are the fundamentals?
So that's a very nice point where this is called a confluence of social media with the stock market, where so now after this happened, with the GameStops, many of the government agencies and even financial agencies are now monitoring some of the social media, or even things that whether there is some certain coordinated buying or coordinated selling. So now that has been taken up as a new technological, or you can say administrative advancement that the hedge funds or even all financial instruments are considering. So that's something to look out for. And it's a very new thing, and we literally haven't found any good podcast which pinpoints it, but we'll keep you posted once we get those.
Right. So I think in closing, I would just like to try to bring together all the points that we just discussed. So as I understand from an absolutely outside perspective, in all this scenario that happened over past few weeks, there are few important players. Maybe one are obviously hedge funds. Second is the financial market in general, and third is retail investors like you and me. So, and it is very important to consider perspective of each side and how they approach the situation, what they gained or what they lost in this entire situation. So yeah, and as everyone has pointed out, there are amazing podcasts to give you every view in that sense. I've also listened to a few that Niranjan and Suresh recommended me last week. They were interesting. They were from a perspective of a retail investor. They were good, informative podcasts. So yeah, so let me just bring you back to the start of our episode. Why do we like having podcasts? So as you have already seen that every perspective in such a complicated situation, which is bordering on philosophy almost, has a voice of itself on a podcast platform. That's amazing. So that's great to have as a resource with you. So yes. So any closing?
And I just want to since Matre was talking about different, so you have to consider that many of us say podcast, you just need to have your headphones on while you're listening. So if you're an employee in Walmart, if you're doing some, I don't know, cleaning job, if you're doing some research in a lab, or you're traveling, you're commuting, you're in a train, or you're on a plane, anywhere, it's a very easy platform to listen to. And me and Suyash, we have a blog, and whenever we even do research to do blogs, we literally get the best content, not on YouTube, not on blogs, but actually from podcasts, because it's like a 30-minute episode with a very high content ratio as compared to, as Bhatia was saying in the start, about some videos and graphics and everything that. So it's a very underappreciated form of platform which we feel. And the third point was the genre and the scale at which. So there are podcasts from politics, news, storybooks, religion, sports, anything you name. And as we go on, you'll see that we'll cover this wide range of genres. And so there is something for everybody at some time. I generally listen to it when I'm cooking. It takes me 30 minutes and it's one episode. So that's why we want to push this platform as a good way of media consumption, as just randomly scrolling through,
Yeah, and it's good to have general awareness about where to find more things. It's at the end of the day, you have to explore on your own. Click on links, sublinks everywhere, descriptions everywhere. Go into descriptions of everything, find out more resources, make your own opinions. Don't take our opinions for a fact, obviously.
Yes.
And so it is excellent. I think this is good for our first episode. This may have been longish because it was our first time doing it. Maybe we blabbered for a little more than we should have. Next time we'll have something more to discuss, and we'll also keep you posted on all the links of podcasts we discussed. We'll have it in the description, and we'll also link to other material that we found preparing